This is the November market update for Southeast Michigan, and the sales in September and in October were actually surprising. October was surprising like September was. In both instances, the number of new contracts written was a lot stronger than we had expected. And it looks like that was some of that pent-up demand that we've been watching for a while is still being released, and that's pretty good news. Now, one of the things that we've noticed also is, in spite of the fact that we had more sales and the activity was stronger, the typical seller probably felt like the market was actually slowing down quite a bit. And the reason is because we've also had a pretty good increase in number of homes on the market. Listing inventories are rising. They've been rising for the last 3 or 4 months. So although we had more sales in October, we also had more homes in the market, so those buyers were spread over a wider base, so that the typical seller would have felt a slower market. In fact, that was acutely shown in the upper markets, above a $500,000 market. In fact, if you look at that last year for August, September, October, a home above the $500,000 range probably had a little less than a showing a week, maybe 3 showings a month. And this year that's down to 2. So, and if you go above 800, it's even slower. And actually that same thing occurred in the under $200,000 market. It was more listings, and though there were in the under $200,000 market, there actually were more buyers on the market. Again, the number of listings were larger, so it felt slower across the board. The only segment where it looks like the activity actually increased was the $300,000 to $500,000 range. This is for Southeast Michigan. There, the number of buyers increased, listings also increased, but not quite as much. So you felt that that market maybe was a little bit stronger the last 30 or 60 days. All that said, what we can expect going in for the next few months is the market to be, from a seller standpoint, feeling slower, both because of the time of year, but also because there are more listings on the market, so the buyers again are spread over a wider base. So you probably feel a little bit slower. The good news is it's hard to imagine we'll have a tougher winter than this past winter. So we think that the sale drop that we saw the first part of last year, we probably will not do any worse. So it's probably the same or better. So the outlook going into the winter, into December and in January, probably is the same, or probably optimistically better than last year. One of the things that we looked at also was, has this demand been actually filled out? Is it all out of the marketplace? And we looked at a chart looking at the number of sales that occurred for the last 20 years or so. And from 2002 to 2006, the number of sales across the country and in Southeast Michigan was higher than the norm, higher than what you'd expect to see in a typical year. Quite a bit higher, actually. And then, of course, after 2006 to 2011, the sales dropped significantly below the norm. This is taking out those foreclosure sales, which kind of threw the numbers off. So what we looked at was, did the drop exceed the rise? So is there something left? And in fact, if you look at those numbers, it's true it did. So it looks like, at least on paper, that although a lot of the demand has been released, a lot of those buyers that were holding back for the last 6 or 7 years have finally moved into the marketplace, there's still something left. So pending some economic changes that scare everyone out of all kinds of things in the market, it looks like we've got, going into this year, good pent-up buyer demand still to release. Not as much as it's been the last couple of years, but still some left. And probably also into 2016 as well. So we'll cross our fingers and hope for some good weather, but overall it looks pretty good.